10-year note treasury yields nudge higher to end the day, back above 4%, and sitting at about 4.03 on today's close. Now, early in the session, we saw yields dip back below 4%, getting down to as low as 3.97 after some early morning data. And prior to today's $37 billion 10-year auction, we saw yields moving higher, getting back above 4% just ahead of the auction. Now, today's auction did see a half basis point tail. However, we did see stronger demand when compared to what we saw last month. So a little bit of a tug of war there, higher yield, yet stronger demand. Now, despite the fact that we saw yields rise today and get back to 403, on the week, we are still down 5 basis points ahead of some key data, and we'll talk about that in a moment. But again, seeing 10-year note yields rise slightly today, closing at 403. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you'll notice that volatility has been trending lower for quite some time over the last couple of weeks. This despite the fact that we did see yields moving higher today, that historical norm where we see yields and vol move in together higher and lower. Today we saw yields moving higher, however, volatility nudged lower. Lastly, let's talk about what we do have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims number. But all the focus is going to be on the CPI, which comes out alongside the claims number. And right now, the Fed is very focused on that as they want to continue to see inflation decline as they have raised rates over this recent rate hike cycle, which is now seemingly coming to an end as the market is pricing in rate cuts as early as March. So midweek, we see 10-year note yields back above 4%, holding at 403 ahead of tomorrow's key CPI data.